Are you one of those investors who are drawn to stocks offering high dividends? You might want to think twice before chasing high dividend stocks, and here's why. Firstly, companies that pay high dividends may not have the best growth potential. These companies may be mature and have little room for expansion. Eventually, the dividends they pay may decrease and their stock price may fall. Secondly, these high dividend stocks may come with a higher risk. In order to maintain the dividend yield, companies may take on too much debt or not reinvest back in the company, which could affect the long-term viability. Thirdly, dividend yields can be deceiving. Investors may overlook the fact that the dividend yield is calculated based on the stock's price. If the stock price falls, even if the dollar amount remains the same, the dividend yield will increase, but this doesn't mean the company is doing well. Lastly, dividends are just a part of the puzzle when it comes to a company's overall financial health. Looking at other factors such as cash flow, debt, and earnings growth can help investors make better informed decisions. Chasing high dividend yields without thoroughly examining a company's financials can be a dangerous path. Don't let the allure of high dividends cloud your judgment. Here at VectorVest, we have a way of finding high dividend paying stocks, but incorporate other factors only found here to help you make better decisions. So let's first understand what dividend yield is all about. So what is a dividend yield? A dividend yield expressed as a percentage is a financial ratio, which is dividend divided by price. And that shows how much a company pays out in dividends each year relative to its stock price. And this is why companies then initiate dividends or grow dividends or say that they're going to pay higher dividends to get people to buy into the company. See, dividends are passive income. If the stock goes up, if the stock goes down, you still get a dividend. It's passive income. The reciprocal of the dividend yield is the total dividends paid net income, which is the dividend payout ratio. So then I took this and I said, well, what is the average dividend that is paid out in the financial sector? So what is the average dividend yield for the financial sector? The average yield for the financial sector is about 4.17%. Now, a lot of people will go and find the biggest paying dividend yield stocks because they're going to get that big dividend. But while the average yield for the financial services company in the S&P 500 averages much lower at 2.5%. This is why people chase the higher dividend yield. The average dividend yield for the sector as a whole remains high due to high yields in the real estate investment trust. I just recently did a video on REITs, and they have to pay out 90% of the money that they make in dividends. All right, so let's take a look at what just people chasing dividends, what that looks like. I'm going to get into the VectorVest software, and I've got a list of stocks that are just high yield stocks that you can go out and find. All right, so in the VectorVest system, I sorted by dividend yield, and look at these yields. So the average yield is about 4.17%, but on the S&P, it's about 2.5%. Good googly muggly. Look at these dividend yields, and these are all ETFs. A lot of ETFs will pay out really high dividends. And these are the stocks that people go out and they say, man, these dividend yields, I'm going to go get that dividend and chase that dividend. So the dividend yields 21, 40, 31, 19, 26, way above the levels that we just explained in regards to the average dividend yield on a stock. Let's take a look. Now, again, all of these are ETFs, so the relative values and relative safeties will remain the same. But out of the 5 that I've shown you, only 2 have a relative timing above 1, which tells me that they're in an uptrend. And they're not in an uptrend by a lot. They're just up in an uptrend. CIs, comfort index, the ability for a stock to withstand long or lengthy price declines. Remember, these are stocks that you're looking at, high dividend yields, but they are very volatile in the fact that these are stocks that are more looking at the probability of going down more than going up. Let's go look at the earnings growth. Well, these are ETFs, so the earnings growth is not there. So as I look at these, 4 of them are holds, 1 of them is sells, and I sit back and I go, I'm not sure that I really want to go chase the dividend yield. But wait a minute. There's more. these 5 stocks, right, or ETFs, I'm going to go down to the bottom and look at the watch list average of these 5 stocks over a set amount of time. Let's go, and this is probably over a 4-month time period. High dividend yields, but what are these ETFs doing? This is the pitfall that many fall into when chasing high dividend yield. Folks, a picture is worth 1,000 words. And if this doesn't explain to you right here, right now, that you need to be careful chasing high dividend yielding stocks, then I don't know what else can. And I think that this is probably more eye-opening for many of you than not of why you need to be very careful chasing high dividend yields. All right, let's flip this. I've got some stocks here for you called high dividend plays, high yield dividend plays. And as I look at these stocks, these are my stock picks for you in this realm of looking for high dividend yield. First off, they're all stocks. Well, only one. One is an ETF, all right? But notice that all my RTs are above 1. One is just barely above 1, and that's Stellantis. That's in the EV space. Number 2, look at all of these stocks. They're all undervalued with the exception of the ETF. That's a bonus when looking at high dividend yield. Number 3, all 4 of my stocks that are not ETFs have a relative value above 1. These stocks should outperform a AAA corporate bond over the next 1 to 3 years. So these are high dividend yielding stocks that will or should outperform the market. That's a very important factor. Relative timing is all above 1, VST is above 1, and not only that, these stocks, CIs, are all above 1 as well. That comfort index, that ability for the stock to resist long or lengthy price declines. When I'm looking to get a dividend, I want to make sure that my stock is going to go up more than it goes down. Let's move over. Earnings growth. 3 out of the 5 have double-digit earnings growth. That's a good deal because the earnings are all positive with the exception of the ETF, and they grow their earnings at a clip of double digits with the exception, again, of Stellantis in a space that's still a lot more speculative, even though the demand for EVs is growing. All right, that's the only stock that doesn't have double-digit earnings growth. Let's move over some more. Here's my dividend yields. Now, they're not gangbusters like that 40 and that 20 that we saw on the other list, but these dividend yields are above the average dividend yield that we saw on the S&P 500, which is sitting in at about 2.5%. We are doubling that or more for each and every stock that pays a dividend. Now, my favorite part in the whole video is we have an indicator that looks at dividend safety. Now, for those of you who are not subscribers to the VectorVest software, I'm going to go down to the stock analysis report. Let's talk about what dividend safety is about. Scroll down. Dividend safety is an indicator of the assurance that the regular cash dividends will be declared and paid at current or higher rates for the foreseeable future. High dividend paying stocks, dividend yield, but these are safe dividends. HBSC has a dividend yield of 53, which is good on a scale between 0 and 99. DS values above 75 typically have relative safety values well above 1. Now, you'll notice that all my relative safeties on these stocks are below 1. I'm okay with the exception of Stellantis. I'm okay with that because this lets me know it's a little bit more of an aggressive play. I need the upside potential. I need the undervalued. I need to know that the stock is in an uptrend. I need to know that the comfort index is above 1. Folks, here at VectorVest, we're going to give you that ability to chase yield to a certain degree, but in a safe manner where you can make better decisions. Now, you saw that graph, that layout that I showed you on the 5 stocks on the other side, where they were all going down, the values were going down. Let me do the same thing for these that we've made a better decision on. View the watch list average, same 4-month time period. Now, different direction, right? Bottom left, top right, a little bit of a sideways move. I would rather to have this because I know that even if the stock goes up or down, I'm making the dividend. The stock's dividends on these particular stocks, little bit level of resistance, now breaking above. Look at that volume, look at the earnings per share, and look at the growth in dividend over that time period. 4 months looks much better and definitely undervalued. Folks, that's what it's all about. Many of you are chasing the dividends and doing it in the way that is not advantageous for you to make money. And when those dividends, you get those dividends, but the stock's price is going down, at some point, you've got to come to a point of diminishing returns. Is it still worth it for you to hold that stock, even if the stock's going down because it pays that high dividend? Would you rather have the best of both worlds? The stocks that are paying above average dividend yield, that are safe, that are going up in price, that have good upside potential, that have that are resilient to downturns and go up more than they go down. That's the world of looking at high dividend yields. Folks, I hope that this opened many people's eyes in regards to chasing high dividend yield and how to do it in a better way. Now, another thing, many of you are not subscribers to the VectorVest software, and I want to give you an opportunity to take advantage of the power of the VectorVest system. We are offering non-subscribers an opportunity to get a free month subscription to the VectorVest software by following the VectorVest diary study. We've talked a lot about this on the channel. The link to the study is located in the description below. The biggest thing about this, those who complete the study will be compensated with a $200 gift card and receive a free month subscription to VectorVest. You folks will have an opportunity to grab hold to all of the power that we show here on the channel to help you guys down the right path to financial freedom. All right, so it's going to be in the link. The link will be in the description down below. Take advantage of it. Folks, you get a trial. You get a free month subscription, and you get a $200 gift card. What more could you not like about it? All right, if you like this video, if you like the content, don't forget to hit the like button. If you're new to the YouTube channel, don't forget to subscribe to the channel, hit the bell icon so that you'll be alerted to when videos like this come out. Folks, I love bringing this information to you, and I hope you appreciate it. Don't forget to hit that like button. This video is over, and until the next time, see ya. Hey VV Nation, are you still not a subscriber to the VectorVest software yet? Wow. Folks, we've shown our subscribers how to make money in the market for a lot of years. But if you're not a subscriber, let me wet your whistle. Listen up here. I've got a survey. There's a link in the description down below that you can take. Please answer the following questions if you'd like to participate in the 2-week diary study documenting the first 2 weeks of your VectorVest trial. And if it's a match, we will reach out to you for scheduling. Study participants will start a trial with VectorVest and document their experience interacting with VectorVest for each day for a 2-week period. Those who complete the study will be compensated with a $200 gift card and receive a free month subscription to VectorVest. A special note here. Please note that if you're receiving this email and are taking the survey doesn't guarantee that you will be selected to participate and or receive the incentive. Folks, you've got nothing to lose. Click the link down below and take charge of your investing.